Welcome to INN CEO Talks. Joining me today is Elmer Stewart, the president and CEO of Copper Fox Metals, which trades on the TSX Venture under the symbol CUU and on the OTCQX under the symbol CPFXF. Mr. Stewart has decades of experience in domestic and international mining and exploration in gold, uranium, base metals, and of course, copper. During his career, he has been involved in the financing and acquisition of a number of base metal and gold projects, as well as the development and construction of 2 underground mines and the construction and operation of 3 open-pit gold mines. Copper Fox Metals is a Canadian-based resource company focused on the exploration and development of large, low-cost copper-gold projects in Canada and the United States. The company's primary assets are its interest in the Schaft Creek joint venture with Teck Resources on the Schaft Creek gold, copper, molybdenum-silver project located in northwestern British Columbia, and the Van Dyke oxide copper deposit located in the Globe Miami mining district in Arizona, as well as 3 other exploration stage projects. Elmer, it's great to see you again. Thanks for coming back and being on the show. You know, you've been busy. You just released your third quarter results, and you have an update on both the Schaft Creek and Van Dyke projects. Why don't you bring our viewers up to date on the recently completed PEAs on both of those projects?
Thank you, Stu. It's good to be here. Let's start with the most recent announcement is the Schaft Creek preliminary economic assessment of the Schaft Creek project. And for reviewers, the preliminary economic assessment was completed by independent contractors, and it's a National Instrument 43-101 report. The PEA was based on $3.25 a pound copper, 133,000 tons a day throughput, and a 21-year mine life. The after-tax U.S. dollar-based net present value discounted at 8% went from $64 million in 2013 to $842 million US in 2021. And the internal rate of return is now 12.9% on an after-tax basis. One of the things we did find out from the Schaft Creek project is they're very sensitive to copper prices and to foreign exchange prices. That's why we like to stay in US denominated dollars, because it takes away the need for foreign exchange. But we found that a 25-cent per pound increase in the price of copper drives the life of mine EBITDA by about $900 million US dollars additional. It also drives the free cash flow by about $700 million additional. And the increase in that 25-cent per pound increase in copper also changes the internal rate of return by approximately 1.4%. So that actually then pushes you up into the level of about 15% internal rate of return on an after-tax basis, which is pretty much the rule of thumb for the industry as the threshold as to whether the project has reached the stage where it may make a sanction and decision. Now, going forward, the PEA also identified a number of project enhancements, which the 2021 program, which is underway, we're focusing on that, and the focus of there is to collect some metallurgical samples to do more testing on metallurgical purposes, but the overall objective is to try and reduce the life of mine processing costs and hopefully increase overall metal recoveries. The second one is the Van Dyke. We brought that a little bit earlier. Well, we own 100% of the Van Dyke project. So we did a PEA in 2015, and it was about $149 million US after tax with pretty robust internal rate of return. But what the work we did in 2019 and 2020, we actually come out with an after-tax value of $645 million US, a 17-year mine life, and a higher annualized copper production. And the internal rate of return on an after-tax basis is like 43%, which really was a very significant increase. But again, there's project enhancements there. And one of the things that we're doing right now is we've got consultants working in Arizona to do a data gap analysis and a conceptual hydrogeological model, because we want to enter into discussions with the EPA and the ADEQ on making a decision whether we should enter the permitting process to permit the project for as a next step, because we feel that permitting the project will obviously reduce your project risk considerably, but should add considerable amount of value while at the same time certainly enhancing our technical understanding of the project.
Okay, so let's just take a look at copper demand right at the moment. Prices were climbing up earlier in the year. They dipped back down, but I see that they're back up pretty much to where they were mid to late spring. What does that tell us about where we're at as far as demand? But in conjunction with that, the amount of new supply that is in exploration or under production, because I think this is an important element that's going to be driving the price of copper.
Yeah, I think the two trends that you can take from that is, one, there's certainly the trend is looking for a substantial increase in demand. And that's predicated on, the green environment, whatever that transitions to be, electrification, replacement of infrastructure. On the other side of the equation is obviously supply. Now, that is a little bit differently, but on the supply side, what's informing that right now has been out there for probably a number of years, and simply it's declining head grades, and you can't do much with that. It's taken longer lead time to get projects into production. And one of the most important things, I think, is the fact that we're not finding them, big deposits close to surface, even though exploration for copper has gone up considerably over the last decade or so. And so with those kind of factors offsetting themselves, inevitably you got to drive the price higher. And clearly, if you've been reading the information in the last few days, there's quite a turmoil in the London Metal Exchange right now about how low it's been. It's the lowest it's been since 1974. But some people are forecasting, and there's a number of forecasts out there, what the shortfall could be, what the demand is going to be. So by 2030, if you take a forecast of 4.5 million tons shortfall, in order to fill that, and that's a 9-year gap, in order to fill that, you're going to need probably 4 mines the size of Escondida to be built and brought into production in 9 years. Clearly, that's quite unrealistic and I think totally unachievable. If you looked at all the other large projects that are out there, and assuming they were all economic, I still don't think you can meet the 4.5 million ton shortfall. And today I read an article where one analyst is predicting an 8.55 million ton shortfall by the year 2020. We've been saying this for a number of years in Copper Fox's disclosure. I think everybody is now getting onto it. And I don't know how you're going to fix the supply side, but the demand side, I think, will take care of itself.
You said that shortfall would be by the year 2020. Do you mean 2030?
2030, yes.
Yeah. Okay. Just for clarification there.
Okay.
So if we take a look at your projects, and if they continue to pan out the way they are, what's your timeline to be able to bring them into production?
Well, our most advanced stage project is Schaft Creek, and is owned by 75% by Teck and 25% by Copper Fox, and they are the operator, and essentially they will make the decisions on the Schaft Creek project. Now, it's not Copper Fox's objective to be in production at Schaft Creek. We are going to continue to monitor Schaft Creek. We're very pleased with the way the value has increased. We think that the work that's being done in 2021 is probably going to, as it is a project enhancement, we think that could have potential to add more significant value to the project. And so what we'll do is we'll continue to monitor that project until we think the project gets in what we classify internally as a fair value territory, and at which point in time the board will meet and decide on as to if they're going to monetize that. Now, the Van Dyke project is a little bit different. We own that 100%, and essentially we think that there's more upside based on that. And again, the board will decide whether it wants to monetize it or what would be the next steps for those projects. But it's not the company's stated strategy to become a miner. It's more like develop the asset and at the right time, fair value, then monetize that asset.
Right. And let's just briefly touch on the fact that we talked about that you had 3 other exploration projects underway right now. Just give a quick little overview of that, even though we're a little bit out of time. I think viewers are going to be interested because you've got 2 really good primary projects, and so then what else are you looking at?
Well, we rounded out our portfolio of projects this year when we acquired the Eagle Head project. Our 3 exploration stage projects, 2 are located in Arizona, and they've never been drilled. We now have identified very large porphyry copper targets, and they're ready for drilling in early 2022, and that is our plan right now. The Eagle Head project's a little bit more advanced than that because it already has 120 mineralized drill holes on it, and the objective of the 2022 program would be clearly to try to hook up or link up the mineralization between the Bornite and the East Zone, and if we're capable of doing that, or we're fortunate enough to do that, then we will have established a zone of mineralization that's approximately 1,500 meters of strike length. But Stu, I will tell you, our exploration projects, we only have them because we think they have big potential to find very large deposits. And what we've seen so far, we think we're on the right track.
Sounds pretty exciting. Just one last question for you. What's your message to investors right at the moment and potential investors?
The message is, it took us a while, but we've really established a lot of value on our projects. If you looked at us pre-2019, you've seen a value of about $160 million US after tax. That's a nice number to have, but it's certainly not compelling. Right now, if you look at the number we have after tax value on our books based on our projects, it's around about $840 million US dollars, a substantial increase. The second thing is that we are advancing the advanced stage projects. We do plan to drill on our exploration stage projects. So a lot of news flow and a discovery on either one of the U.S.-based projects is going to be quite exciting. And the third thing is that we're trading right now. We're trading about, our market cap is about 16% of our net asset value of the company, and we think that number should be higher. And it's almost, from my mind, we're undervalued. But we need to continue the program of adding value, and hopefully we can, the market will recognize the value in Copper Fox, and we'll take advantage of that.
Yeah, well, Elmer, you're clearly upbeat. I can sense it in your, the way that you're speaking about these projects. Like, it's unfolding the way that you've told me that they would over the last couple of years, and I'm looking forward to a future update in the coming months.
Nice to see you again, Stu.
Yeah, thank you.